Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and before we get into the charts, I just want to let you all know that we've had a pretty busy week this week. We introduced for the very first time Technical Tuesday, which is more or less our educational report that will go out each and every Tuesday, so be sure to catch that. We covered Bollinger Bands and how to use them to trade the markets. And I think the folks that are going to get the greatest benefit out of this are going to be the option traders, as you will soon see from not the trade of the week. I actually had a hard time finding one. So we're going to show you the trades, plural, of the week. So that was pretty exciting. We've had a really great year so far, and it's only getting better. Now, on Wednesday, for the first time, we went live with the midweek report. That's still on the YouTube channel. We introduced Nod Live and Person, that is, and we talked about the general markets, the economic condition. We talked about what was going on prior to the bill being passed in the House, the big beautiful bill, or some are referring to it as the mega bill. And that's what really dominated the markets today. We had that news break. It is absolutely official now. This is the biggest bill ever passed with regard to spending. And I don't know what's going to happen with the Fed. We'll have to see, because Donald Trump is talking about removing Jerome Powell. I do not believe he's going to be able to do that without the Supreme Court getting involved. However, if the Supreme Court determines that he is able to remove Powell from that position, that could bring about some uncertainty in the market, maybe even some volatility, and that could shake things up. In addition to that, Elon Musk vowed to create a third party, the American Party, and that news is already starting to circulate throughout the social media. Now, this is an area that I have a lot of experience with, and let me explain why I am concerned about this. Because if Elon Musk comes in there and funds the efforts to create another party, that will split the parties both ways. Both Democrat and Republican parties will be split. And this happened back in 1992. I was involved with Ross Perot's campaign. I was the 2nd Congressional District Leader for United We Stand, which was the grassroots movement that brought Ross Perot out into the public. And it was on the Larry King show at the time that he announced his run for the presidency. And in fact, I have a photo here of me sitting with Ross Perot and the team. Ross Perot decided that he wanted to create a third party called the Reform Party. And it was during this day that the photo was taken that we took a vote. This was out on Long Island, and we voted. I voted against it because I thought it would split the Republican Party, which in fact it did, and it led to Bill Clinton being elected because the Republican vote was split. And so I think that same thing could happen if Elon Musk creates another party. It's going to dilute the efforts of the MAGA Republicans. It could actually create more friction within the parties in general. And it's hard to say exactly what's going to happen. But when Ross Perot ran as an independent, he was a billionaire out of Texas, he saw a lot of concern from the American people about the budget deficits. He didn't like what was happening with the economy at the time. It was George H.W. Bush that was president at the time. And then when Ross Perot jumped into the race, it just broke loose. Now, even though I voted against the Reform Party, it actually passed. It is a party that you will see once in a while. You will see some people running under that ticket. And I don't know what's going to happen with Elon Musk, but I know he's pretty pissed off right now. But let's bring it back to the markets. Here you have the Dow Jones Industrial Average ETF, ticker symbol DIA, and you can see how the price has gone almost vertical. Now we have a lot of green on that chart. You see all this green down here? That's known as a stale green light. Now on the midweek report, I did mention that the markets would most likely rally upon this mega bill passing. It did just that. But remember the old saying, buy the rumor, sell the news. We could very well see some profit taking coming in, at least in the near future. We'll have to see, but there's no question about it. This market is extremely overbought. Now, let me show you. We talked about the Bollinger Bands on Tuesday. Let me show you what these markets look like here right across the board using Bollinger Bands set at 3 standard deviations here. Now, John Bollinger created them using 2 standard deviations. I use 3 to show the extreme overbought or oversold conditions. And you can see here that every single time when the price has either touched or violated that upper band while the CCI was going down, it resulted in pretty big sell-offs. Here you could see it touched. This wasn't a massive sell-off, but you could see how the CCI was turning down here. And we did sell off to the 20-period moving average. Here's another one. It sold off. Here it came close to touching, not quite, but we saw the sell-off. Here, again, this was more of a delayed reaction. Touched the upper band of 3 standard deviations. And right here, you could see how the CCI pivoted lower, and that resulted in an absolute massive sell-off. And so I do believe that we could see something like that. And in the meantime, we got to take it one step at a time. Right now, the price action of the Dow is riding that upper band. But look down below. Not only is the CCI pivoting lower, but the stochastic is now hinging. And we do have a drop in volume on the daily chart. Let me zoom in here so you can see that. So we have the drop in volume as it's touching and trading close to that upper band. Now, the same thing can be said for IWM. Here we go. This is 3 standard deviations. And again, the history has proven this to be absolutely true, where each and every time we touched or came close to that band and then pivoted back down from that band, you could see the result, how often it will sell off. Here, this was the big sell-off here, and we had another sell-off to the moving average. John Bollinger trades the Bollinger Bands in a strategy called mean reversion. When he trades, he's looking to get out when it starts coming back to the mean or touching that 20-period moving average. But a lot of times, like in this instance here, you'll see it touch or converge back to that moving average, and then it starts whipping the other way like the pendulum. And so that is also a possibility that if we come down to that 20-period moving average breakout, see a volume increase, we could see it zigzag down just like we saw this ABCD pattern back here in March. Okay, now I'm going to go right across the board and show you what the Qs look like, because I find this extremely interesting. You can see here we're touching the upper band, the 3 sigma, and we got the oscillators pivoting lower. If you look at SPY, you could see the same thing. Now, we have not yet pivoted down from that upper band, at least not yet. Once that occurs, anyone who is long, I would strongly suggest, and I don't take this advice, this is just pure trading strategy, I would suggest that you at least protect your profits. It could either be with stop loss orders, or you could use options, or you could take some of the position off the table, maybe get out or scale out a little at a time. And then, of course, that will create buying power for yourself. And then from there, you'll be able to buy at the lower levels and not feel like you're missing out on any of the moves. Now, looking at VIX, this is the VIX. We are hovering again right at these lows right here. Let me just draw a horizontal line so you can see what I'm talking about here. If you look at the VIX and where it's been bouncing right off of this key support level right here, see that? This is the low from back in March, and it seems like every time it gets down to this level, we get some decent bounces. And if I zoom in here, you've got a spinning top that is following yesterday's inverted hammer. Those are all bullish candles here, but what I'm looking at mainly is all of this red. Look at that. you have, what is that, 3, 6, 9, you have 11 red candles in a row with not a single green candle in there. So we're long overdue on the VIX for a rally, and we have this open gap above the market, which will absolutely one day fill. We just don't know when, but it absolutely will fill because all gaps on the VIX fill because it's an oscillating index. Now, before we get into the trades of the week, let me talk a little bit about the valuation of the market. The Warren Buffett Indicator, also known as the total market cap to GDP ratio, is a simple calculation. You basically take the total market cap of all the publicly traded stocks and you divide that by the GDP. As of today, July 3rd, this is at 209.5%. Now keep in mind that above 115 is considered significantly overvalued. So we're almost double that number. We're not far away. It's 209.5. And how do you even describe that if 115 is significantly overvalued? Was that insanely overvalued? I don't know. I'm not going to throw words into the definition here or into the metrics, but this is no doubt the most overbought, overvalued, extended market in the history of the U.S. markets. So, does that mean you absolutely can't take long positions? Not at all. In fact, while my long-term outlook is extremely bearish for the market, because remember that pendulum, if we're extremely or insanely overbought at this level and the pendulum swings the other way, what does that mean? It means the bear market or the crash could be much more significant than anything that we've seen. If we're in the most overbought market in the history of the markets, what would prevent us from having one of the most extreme crashes in history? We don't know. The pendulum does swing both ways. We'll have to find out. And the reason why I think you could still take long positions is that the market and the momentum is still moving, especially on individual stocks. And we go out there and we search the general markets for trade candidates and we publish those to our members. And like I said, I couldn't find just one. So let's take a look at the last 5, starting with BRZE. This is Braze, ticker symbol BRZE. And on June 23rd, we bought the October 30 calls for 1.5. Now, as of today, those calls are now trading $2.80. So that position, again, that went out on June 23rd right here, that position as of today is up 86.6%. Now, for the members who have this, understand I'm not giving away any secrets that you've paid for. A couple of weeks ago, I even mentioned this, that if you're hearing me mention some of these trades, then I'm looking at that as the trade is over and I'm taking profits. I can only tell you what I'm doing. Remember, this is a report card that I'm using for educational purposes. I'm not giving you advice. I could only tell you what I'm doing. Right? So on July 3rd here, if you're still in it, then I would say the best thing to do is protect the profits and then hope that Monday it's still trading at these levels. Now, the second trade that went out in that very same day was CARR. This is Carrier Global Corp, where we bought the September 75 calls for 280. And as of today, they're trading 440. So that trade is up 57.1%. Now, keep in mind that if you're not a member, understand that when these trade publications go out, I put the instruction out in the action and what's to be taken. And then what I do is I put a video out. If you click on this little link, a video pops up. I show you the chart. I talk about the stock. I talk about the technicals. I talk about the trade that's going out. I give targets on each one of those. And then I guide people in a direction that will help them at least learn how to read the charts. Now, on June 30th, here we go. This is Molson Coors. We put that ticker symbol TAP. We bought the October 52.5 calls for $1. For $1. The very next day, that option that was trading for $1 was trading $1.50. So in one day, the value of that option went up by 50%. And then finally, the last trade in this group is Etsy, where on July 1st, we bought the October 55 calls for $3.30. And you can see here that as of today, those calls were trading $5.40. So that trade was up 63.6%. Now I'm going to show you what we're looking at. Right here is July 1st. You see that? Now you hear me talk about bullish engulfing candles quite often on these weekly market reports. You hear me talk about inverted hammers, shooting stars, hammers. You hear me talk about them. You can see the examples that I put out. Well, on that day when the trade publication went out, we had a bullish engulfing candle. And at the same time, if you look down below here, we had the CCI also crossing exactly on that day with a buy signal. Now, why would I get out of this trade on a day like today? Well, number one, that's a small body candle, and that's known as a spinning top. Number two, we're seeing that candle on a lower volume day as it's approaching the 20-period moving average as a resistance point. You see that? So these trade publications are designed for short-term trades. They're not day trades. They're certainly not investments. We swing trade the option markets. Now, during the course of time, while we've been holding that position, you can see the stock had gone up $4. So that's an 8% move in the underlying price of the stock. But as you can see, the leverage that we got on the option itself was obviously a lot greater than 8%. It's 63.6%. That's the power of options, because you're buying a contract that costs much less money than the underlying stock. So therefore, you get leverage. And you might notice that when I'm buying an option, I'm not buying options that are going to be expire in a couple of days. I give myself time. October here, September, October. It does not mean you have to hold the options for all that time until October, but it gives you the luxury of knowing, you know what, maybe I can hold a little bit longer, or maybe I'll take some profits on half and let the other half ride to the higher levels if, in fact, that's what the stock is going to do. So that's what we teach our members. If you're interested in coming on board for at least 15 days for free, we have a no strings attached offer. All you have to do is give us your email and your name, and we can get you involved. There's no credit cards, nothing like that. There's no trickery where you have to, call us to cancel. It automatically expires after 15 days, and we leave it up to you whether or not you would like to continue to trade with us. We have a lot of new members coming on board, and a lot of that, I will have to say, is coming from YouTube. The audience is growing. We have new subscribers, and they come on for the 15-day trial. They hear me talk on these webinars. They interact with the members themselves. We have a great community, and they get to ask questions as well. Some people just come on board. They don't even trade. They just watch, or they'll mock trade or put paper trades in to see how this all works. We leave it up to you. We can't tell you when to get out. We can give you the candidates. We can tell you when to get in, and then show you the charts on how to manage the risk, how to establish your own price targets like I do each and every week. And you can learn as you go. So again, thank you so much for watching these videos and liking and commenting and subscribing. If you want to be notified when the next live report is coming out, go up to the top of our YouTube page here and click on that notification bell, and then it will notify you. Now, we've been opening up the room about 10 or 15 minutes early, and then when we hit the go button to go live, you're not going to miss a single thing. If you're searching around for us, you may not even get the opening comments, and that's why I tell people hit that notification bell and you'll be notified immediately. So again, thank you so much. Have a great and safe, happy 4th of July, and we'll talk to you next week. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.